Thanks for staying with us on SABC News. Let's take a look at what's moving the markets locally and internationally. So Asian stocks fell on Wednesday after faltering growth in China and Europe heightened concerns about the global economic momentum. Investor sentiment there also dampened by a private sector survey yesterday that showed that China's services activity expanded at the slowest pace in 8 months in August, reflecting weak demand from China's August trade data that's set to be released tomorrow. Analysts are expecting exports and imports to continue their declines, but at a slower pace. Staying in China, they're also set to release lending and inflation data in the coming few days. So the Hang Seng Index closed down 150 points. Japan's Nikkei 222 share average stood out to gain 0.52%. Let's go to Wall Street then. Over in the United States, the S&P 500 closed lower on Tuesday, pressured by rising Treasury yields and oil prices as investors looked at prospects for the Federal Reserve's interest rate path. U.S. Treasury yields rose after economic data showed resilience there. So the Dow Jones Industrial Average fell 0.56%, the S&P 500 lost 0.42%, and the Nasdaq Composite dropped 0.08%. Closer to home, the JSE lower at midday, the all-share index weakening by 0.9% to 74,310. Industrial 25 index is 0.9% down. Financials down 1.2%. Markets in Europe are weaker at this hour. Britain's FTSE 100 has declined by 0.7%. The CAC 40 in France is 0.7% weaker, and Germany's DAX has shed 0.4%. The rand trading at 19 rand and 23 cents to the dollar, 24 rand and 15 cents to the pound sterling, and 20 rand and 66 cents to the euro. When we go and look at commodities, gold's trading at $1,926 an ounce, platinum at $923 an ounce, and a barrel of Brent crude oil at $89.66. All right, let's make sense of these numbers. Patrick Matidi, who's the head of equities at Aluwani Capital, joins me now. Patrick, thanks so much for your time on SABC News this afternoon. Let's start in the US. They closed for that Labor Day, and then they were in the red after that Labor Day holiday. Why? And just take us through what's happening in the US.
Good afternoon, and thanks for having me. I think if you look at the month of August, it was a very difficult month for financial markets across the globe. And I think towards the end of that month, the Jackson Hole Symposium, which is an annual gathering of central bankers across the globe, they gather in the US. I think the closing speech by the Fed Chair, Jerome Powell, I think that set the tone in terms of the outlook for financial markets from an inflation point of view and also from a growth point of view. And I think since that statement and that prognosis, we actually have been struggling to regain our footing. And hence, we continue to be on the back foot, with the first few days of September, also registering, very low returns. So the overarching theme for markets is, yes, around inflation, and also what it means for interest rates, and therefore what that means for growth going forward. I think, if you look at economic numbers coming out, there is good cause for concern that indeed we are likely to have inflation higher for longer. And therefore, the authorities will keep interest rates higher for longer in the fight against inflation. And as a result, the growth that we are all looking for from an economic point of view, that may be delayed.
Okay. And so if we go over to Asia and maybe a little bit of Europe, but let's just go to Asia, there's been concerns about the slowdown in the global market, a little bit of relief coming through in the United States. But in Asia, that data coming out really supporting those concerns about what's going to happen. Can you take me through some of that data that's leading to those jitters?
Yeah, so specifically, if you look at China, out of Asia, they have been leading with the poor economic numbers. Mm-hmm. So recently, they came out with the services sector outlook that is pretty much expected to be poor. And then also, if you look at going forward, the inflation number, I think China is the only country in the world that has not had an inflation scare. So they're actually going through deflation, which gives an indication of how poor or weak that economy has been, struggling to regain its footing post-COVID. So there's been a whole series of economic numbers, including GDP out of China, that has actually been disappointing. And hence, if you look at that market on a year-to-date basis, it's down about 12%, as opposed to about flat for the other regions. So the challenges in China are a lot more broad-based. If you look at the property market, also there's a lot of debt in there, and some of the companies are actually struggling under that mountain of debt, which raises the prospects for default. And any stimulus package that has been put through so far, has not been adequate given the challenges that they're actually facing.
Okay. You're speaking about GDP data in China. Let's come to South Africa and look at that surprising on the upside yesterday. I think still a very weak number, 0.6%. Did that move the markets at all? And just take us through what's happening on the JSE at lunchtime.
Yeah, so starting with the GDP number that came out yesterday, indeed it was better than expected, even though it was a low number in absolute terms, now up 0.6% for the second quarter. And a lot of that has to do with the easing of the grid in quarter two versus quarter one. So you'll recall coming out of the new year, we experienced quite a lot of load shedding. It did ease a little bit into Q2, even though the expectation was that for going to be a very difficult, sort of a winter, but the experience was a lot better, and hence, we're seeing the GDP number coming through quite positively. So it remains to be seen what happens around Q3 and also the rest of the year, from a growth point of view. The number itself yesterday, unfortunately, it did not move the market that much. We saw the JSE down, and today is also down about 0.9%, as you mentioned in your intro. And that's largely because we have other challenges, domestically. So if you look at the fiscal situation in terms of government finances, we're seeing a big shortfalls on the revenue side, given the slowdown in the economy, but also we're seeing a lot of pressure on the spending side, which means that for that, the gap, between what you're making or earning and what you're spending, that will have to be borrowed. And we're seeing borrowing costs also going up, which is not a good, sort of a measure. So on the fiscal side, I think, the finance minister's task is, it's cut out for him. We'll have to see what he says in the mid-term budget statement in October. But certainly there are pressures coming through, which is why also the rand has been on the back foot of late.
All right, we're about to wrap up, but let's go through company news locally and internationally that you found interesting. I thought Tesla and ShopRite were doing quite well and quite big stories. And then if we have time, just take us through what's happening with the commodities markets. I saw Saudi Arabia and Russia make an announcement about oil.
Yeah, I think very quickly on ShopRite yesterday, very good sort of a market share report post the AGM. It's one company that continues to gain market share, even though the overall cake, from a broad economy is not growing. And the casualties tend to be Pick n Pay and Spar, where they're taking market share from. So a great story in the local environment where you've got a very strong management team that is able to make a plan, despite the challenges that we are facing from a high inflation point of view, from a high interest rate point of view, when you look at it from a consumer's perspective. So that's a good story. And then if you then come back today, you look at TFG, Foschini Group, it's complete opposite to ShopRite, where they are seeing massive headwinds in terms of sales, in terms of costs, and the impact of load shedding, clearly that impacting on the business. So they are predicting a 25% decline in earnings, which is not great, especially in this environment. And then if you then look elsewhere in the commodities space, I think we need to focus on oil, largely because I saw last night, we had one of the highest, petrol price hikes. So a combination of a high oil price and a weaker rand, unfortunately, does not bode well for us as consumers because it translates into higher petrol prices at the pump. And that higher oil prices is being driven, as we say, by Saudi and Russia, who control quite a big chunk of the market, and have come out to say that they will be looking at cutting back on production, which means that there will be a squeeze in the market, and we can expect high oil prices going forward.
All right, Patrick Matsidi from Aluwana Capital, thank you so much for your time and insight on SABC News this afternoon, just taking us through what's moving the markets locally and internationally. It's time for a short break. When we come back, we'll have more business news. We'll be finding out about business confidence, and also we'll be speaking to SARS Commissioner Edward Kiswitter. Do stay with us on SABC News.